Welcome, everybody. We're delighted to have you join us on a panel session today about sustainability is sponsored by Accountability for a Sustainable World. Is a little bit of a mouthful, but it has the right pieces. Accounting and accountability, sustainability, and the agenda of how much it matters for this world. But as we know, good things all start with data. And today we'll be talking a lot about data. I'm joined by Daniel from AllocNow and Sebastian from SAP. I'm Martha Amram from GLYNT.AI. And together we cover the span of how you might use data, from primary data sources within the company, enriching it with external validated data sources, such as from AllocNow, and how it comes together in carbon accounting at SAP. So let's do a round of introductions, and then we'll jump right into a series of good questions. So I'm Martha Amram. I'm the CEO of GLYNT.AI. And what we do, as you can tell from our name, is use AI-powered data flows. We help companies automate and get audit-ready data on energy, water, waste, and emissions, and then they can insert it in the software programs of their choice, including what we're hearing today from SAP. Our focus is on reliable finance-grade data. We prepare sustainability data as rigorously as financial data, and that means two things. One is investors will trust it. That's one world of finance. And the other one is internal teams trust it, so that you can put a carbon emissions number right up against a revenue number and then make a revenue trade-off, knowing that you're comparing high-integrity data to high-integrity data. And that's how you drive sustainability into operational wins. So from AI-powered abundance of accurate data, lots and lots of ways to turn it into good business wins. That's what GLYNT is here to do. And we work with businesses around the world, providing a unified, harmonized system of data that flows from anywhere to anywhere. I'm going to turn it over now to Daniel to introduce himself and his company, AllocNow.
Thank you very much, Martha. As Martha already said, my name is Daniel. I'm one of the co-founders and managing directors of AllocNow, the company specializing in automating life cycle assessments for the chemicals and process industry. So we calculate for example, the carbon footprint of products of everything that a company produces across the globe. And we believe when we talk about scaling and automating life cycle assessment, there is essentially two dimensions. One is covering every product that a company produces in their assets. And the other aspect is making this information on product information available to anyone within the company who needs to know in order to act. And this is obviously not just sustainability practitioners and maybe finance interested in this information, but also people in procurement, in process engineering and marketing and sales to either drive down emissions or to promote a certain value proposition on reduced carbon into market. That's we automate life cycle assessments based on data that are typically already there in an enterprise, and that's the good news. So we help companies really leverage the treasure of data that they have in their ERP systems and other accounting systems. Basically support companies in making decarbonization part of their value proposition and supporting them further driving down emissions on product level.
Thank you. And turning to Bastian.
Yeah, thank you. Yeah, I'm Bastian Distler. I'm product manager for SAP in the finance area. And as Martha rightfully said, we want to move the carbon topic into finance because it has relationships to each other. We want to treat carbon like money, we always say, because we think it deserves the same rigor if you really take carbon seriously. But also, it also is interlinked with finance, which means if you take decisions to improve your carbon impact, it often goes along with investments you take. You have to analyze what the impact of the measures you take is, both from a carbon perspective, but also not to forget from a financial perspective, because in the end of the day, you need to understand what measure will have which impact on your margins, for example, and also not taking any measures will have impact on your financial margins. And this is an important thing to analyze side by side. So meaning in a combined manner that you can see the finance and the carbon impact. And that's what we are doing with a product that we call SAP Green Ledger, where we apply the principles, the rules, the methods, and the processes of financial accounting and management accounting to the carbon world.
Thanks. And so as you see, the span here is pretty great. It's from GLYNT, which is producing primary activity data with the wrangling up all the data for companies, AllocNow, which is also using primary activity data plus external methodologies and data references, and then SAP, which is bringing it together into a carbon accounting system with good methodology. So we're going to take a round of deep dives on each of these, and we're going to frame it from the user's perspective. What are the jobs that the user wants to get done? Why do they work with a company like GLYNT or AllocNow? And why do they use SAP Green Ledger? And this will involve some screen sharing and some real demonstrations. But let me start myself with GLYNT. I'm actually the one that won't be doing screen demonstrations because that's actually one of the big findings that we have from the market. Companies are sitting, as we've mentioned, on a lot of good data to be used in sustainability reporting. Typically, it comes from business invoices or direct utility logins to get it from utility sites. It could be sub-meter readings and IoT sensor readings as well, and environmental reporting. So there's different types of semi-structured and unstructured data needs to be pulled together. You need a data service that delivers it on a frequent basis, on a unified, trusted basis. And you need data management tools to help you make sure that you trust it, such as chain of custody reporting, data lineage, gap analysis, accuracy level testing, and so on. GLYNT does provide all of those items, so it's like not just data, but data on steroids. And what we have found is that people don't want to log into software to do that work. They've already bought some kind of system. It could be SAP Green Ledger. It could be a different type of sustainability or carbon accounting software. And so they want to log in over there. So we provide our reports so that these other platforms can enrich and add. And to be frank, about 1/3 of our global customers don't even use reporting software yet. They've built their own system in-house, and they're quite happy with it. They plan to stay that way. So we're all talking about serving a very big mission, and it needs a lot of data. And I would come back to that point, which is highly granular, highly aggregated data is often used for reporting. And that might be something like, hey, I have a site and it uses 2,500 kWh per year and produces so much in greenhouse gas emissions. I'm done. Actually, you're not, because you can't turn that into an operational win with that coarse, high-level, once-a-year reporting, nor can you meet the many customer requests for your data. And we just worked with a global hotel company, for example, and the mandate from their corporate customers is, tell me the emissions per guest room per night, or I, as let's say Google or Microsoft or General Motors, won't write a corporate guest room contract with you. I need to know that number so I can report it myself in my own numbers. And so for this hotel chain, getting the sustainability data per room available per night is a must-have. And we're seeing that out there in the market, in the automotive supply chain, in hospitality, in corporate commercial real estate, where this is all indicative of both climate exposure, risk, level of costs, and if you provide it, good operational capabilities. So GLYNT's here to help you do all of that in the software that you choose. One of our mantras is sustainability data everywhere, from any file to any system. And we just make that happen. And we're always focused on making sure the data is financial grade and audit ready. There are 2 audit standards out there that people commonly use, ISO 14064-3, just to be specific, and ISA 5000. And these are frameworks that tell companies how they will be audited and tell the auditors what to look for. So if you dig deep into those frameworks, you'll find a pretty long checklist of the things you need to do. It's not just produce data. Where did it come from? How are the calculations handled? Do you have good data governance processes? So you have change logs. And just imagine, going back to a global hotel chain, they're always buying and selling properties, closing and opening properties. They might have 10 or 15% turnover of properties a year. We also work with real estate portfolios where they have up to 25% turnover in properties per year. So you need to have excellent change management as you assemble all this data. Happy to talk about it more, but the basic point is get your data from where it originates to where it needs to go and bring yourself into the world of modern data and AI. We use AI to produce the data, but bring it into the next step with finance grade and audit readiness, because that delivers data people can trust. I'm going to ask Daniel now to do a deep dive into the jobs that people want to get done using his services.
Right, thanks, Martha. So picking up in your example of the hotel room, I think that's a great case because you can see that basically it's about attributing emissions or environmental impacts to certain entities of a company. And in our case, looking at, let's say, manufacturing industries, especially chemicals or process industries where companies typically operate to produce thousands of products, that's a very difficult task, continuous task. And this is exactly what our product sustainability platform does and supports company with. So I'm sharing a screen of a demo right here. Of course, that's only a demo data set in this company, so naturally does not exist. But what the software does is really for a variety of so-called environmental impacts, where global warming potentials or product carbon footprints are just one. We calculate the specific impact for every product that a company produces across all plants that the company operates globally. And the beauty here is that we really leverage enterprise data, typically stemming from ERP systems, such as SAP, for example, which makes it very easy for business users to navigate their product portfolio, find the product that they would be interested in, right? So, for example, searching for a certain name, ID, or filtering for a certain plant that they operate in, and so forth. And for each of these line items, then experts or even non-experts get all the information that they need to understand how a certain footprint actually accumulates. Right, so breaking it down into raw material contributor, product contributor, and so forth. Or in this, I think is the most interesting part, really breaking down how a product is produced within that reporting company, stemming across all the external purchases that may be involved for producing a certain product, or production processes that may be involved in producing a product, or also looking at transfers when a precursor is produced in a different site than the actual product is happening. And all this allows companies to have transparency at scale for every product that the company produces. It allows them to run scenarios in order to assess potential reduction opportunities. And of course, it also allows them to report very quickly. And instead of taking several weeks, if not months, to provide a product carbon footprint to an interested customer, it's a matter of a few minutes, if not even clicks, to get the right data in the hands of the people who are interested in it. And that is in a nutshell what MISPI does.
I'm going to ask you a follow-up question immediately, which is, let's talk about the business wins, because now that we're looking at your screen, and I would say, what are the business wins in getting the job done? And once you have the information available from your product, what are the business wins?
Yeah. Well, Martha, there's two things. One is, let's say, externally facing, right? So as you rightly said in your hotel example, it's the very same, for example, in the pharmaceutical industry or even the chemicals. Either health systems or downstream, let's say, FMCG customers or automotive customers, they have a Scope 3 target, and typically chemical companies are part of that Scope 3 target. So driving down emissions, providing products which are, provide a low carbon footprint is essential to either staying in business or to winning new business. No, it's simply a business imperative. And the second one is an internal target that is enabling reduction, right? So we all know that driving down emissions is a cost-intensive matter, right? So it requires CapEx, it requires some improvements, and you can spend the dollar only once. So then the question is where to spend it. What are the hotspots that really make an impact in your production chain? And this is the transparency that you receive only if you have full portfolio coverage. It doesn't make sense that you look at 10 products or thousands in your portfolio. You may miss the actual important ones. And that's why transparency at scale is really paramount for doing both, satisfying customers and also moving to the right direction in terms of production.
Right. Thanks. And Bastian, let's pick that up. Let's take a deep dive into what you're doing, but also that phrase, transparency at scale. I think that's something you can demonstrate as well.
Yeah, thank you, Martha. And I'm happy to share or give you a little bit of insight into what Green Ledger basically does and how it builds on top of tools like you have been mentioning. Green Ledger, as I said, is a carbon accounting solution. So that means we post double entry bookkeeping journal entries. But of course, nobody does this, also not in financial accounting, just because of the sake of posting debits and credits, right? So in the end, you do that because you fulfill reporting needs and you want to be able to analyze your financial performance, and in our case also the carbon performance. What you're seeing here is a dashboard where you can analyze how your company is doing in terms of emissions. You can understand your emissions, which is very similar in other tools that existed there. What is really new is we put carbon on financial dimensions, on those dimensions where typically companies take decisions on. And this is typically things like profit centers or profit center groups that they want to understand not just how the entire company is doing, but how a certain area of the business is doing, so that you filter down and look at the carbon numbers for a certain business segment, business area, business unit you are in. But in addition to that, also I talked about the relation of carbon and finance. So you can analyze how you're doing in a certain business segment, or how you're doing for the entire company, if you like. So to see, okay, how are my financial measures like operating income or gross margin or revenues, or also you can understand your cost structures, compared to how the carbon emissions evolved. So you can understand and see, okay, how much carbon did we emit per euro or dollar that we actually earned in a certain market segment? Because that is also the basis then later on to take measures and to say, okay, what will happen to those figures if I take certain measures? Will I still be profitable? Will I be even more profitable? And what will be the carbon impact that my business is causing? And that's a very important point for us to really bring carbon and finance together, because they interrelate. They interrelate already today, because in many industries you have to buy allowances, or if you're on a net zero target, you are buying carbon reduction certificates, which cost money. And whatever you do, you will need to invest money in reducing the carbon footprint. So that's important to understand both KPIs, the financial one and the carbon one. But I'm asked very often, okay, that sounds nice, but well, it's already held today to get carbon calculated, and Daniel showed it very nicely. There are tools that help you on this part already, to come from averages to actuals to really assess the carbon footprint of the products. So we're on a good way there, but the fear often of people I talk to is, oh, and now we shall bring it on different granularities, like on profit center or even cost center level. Isn't that even another burden? And I'm saying no, actually not, because as Martha said in the very beginning, there is a lot of information already sitting in the systems, like an ERP system like S4HANA from SAP. Because what we can analyze is, and I'm jumping to another screen, we can analyze similar to what Daniel showed for a finished good. Okay, how much carbon is it built? How much carbon is in that product? And we do that by analyzing production orders in the system. So we look into the S4HANA system and see what flew into that product. So how many raw materials did we use, and what were the energy consumptions and with that the carbon impact of the assembly lines in this example. And even further, we can analyze and say, okay, where did we get the raw materials from different suppliers? They might have different carbon footprints, which then flow in the end into the product. And once we have this number, we, like here in this example, the 180 tons, we want to apply them to the same financial dimensions where also the money went, right? If you purchase materials and put them on stock, that will have an impact on your current assets. So you put it on inventory, on stock, on an account, on a financial account, because it has a certain value, it has a certain euro or dollar value. And we also put it on things like profit centers. This is happening already in financial accounting. I show here a journal entry as it looks like in financial accounting. And there you see there are accounts used. There's on debit and credit side, there's a euro value. And you also see profit center assignments. And it could be also other things like cost center, segments, business units, and so on. So we have those dimensions available because the money, in this case, the 19,000 euros were posted on these accounts and on this profit center. And we simply go there and take the number that I had shown you before and post it in the carbon journal, if you like, on the very same account, on the very same profit center, on the very same segment. So we just copy this, and all we exchange or we replace is the euro value. We replace it simply by the carbon value that we have calculated or that is provided by tools like from Martha and Daniel, and apply this number then to the journal entry, and voila, then you have it on the profit center, you have it on the account where also the money sits. And then it's fairly easy to compare and see, okay, how much did it cost? What is the cost structure of the products I produced? And what was the carbon impact to it? Just for the sake of completeness, we are talking a lot with academia on the offsetting line. So should we put carbon on receivables, or on payables in this case, or on the goods receipt, invoice receipt, clearing account? Academia says, no, actually, this is a new kind of liability towards nature, towards society, because by buying these raw materials, we have taken responsibility for polluting the world. And if you produce something the same, so we put this on a GHG liability account, just in case you wondered. But the basic message I wanted to give is the carbon calculation is there, provided by several tools out there, and bringing it on financial dimensions can be taken over using SAP Green Ledger by looking into the SAP or also other system and applying the same accounts and account assignments to there. I want to raise one more item or one more topic, because I was talking about actuals and analyzing the past, so looking at the actuals. But of course, the next logical step is planning ahead, and we also have planning functionalities and also simulation functionalities, because and this shows nicely again how carbon and finance is related. Because what happens if you do the financial plan? You look and say, okay, what are we expecting to, for example, sell next year? If we are selling more, we will have to produce more. If we produce more, we have to buy more raw materials and we will consume more energy because, we are producing a bigger outcome. And these kind of things that you do for financial planning, that you look at your sales planning, at your production planning, at your purchasing planning, this you can leverage for the carbon planning, because it's the same story. If you produce more and if you buy more raw materials, you will have more Scope 3.1 emissions. If you consume more energy because you produce more, you will have more Scope 1 and Scope 2 emissions. And I just wanted to mention this. A lot of data can be leveraged from an ERP system that you're anyway using to run your business. And tools provided by Martha, Daniel, and myself, or SAP, is using this data to make sure you can do proper carbon accounting, carbon planning, carbon simulation without the big burden of a lot of additional effort, which is, in a sense, no longer true. And with that, I'm done with my part of the presentation or of the demo.
Well, so far, but thank you. I just wanted to kind of wrap this together to say what we've heard from Daniel and Bastian is different ways in which you can manage data to provide opportunities to make better business decisions. And to just put a finger on it, I think we're all talking about an awful lot more data. By using automation and AI, we can actually produce that data. And here at GLYNT, we have about 4 to 5 month payback, meaning that if you're coming off a different system, which typically is semi-automated or spreadsheet-based, and you use the more modern AI-powered tools of GLYNT, then we can reduce your costs significantly, 60 to 70%. And so that's just business efficiency in producing this kind of data. And then we're all seeing business wins once you have the data at your fingertips. And here at GLYNT, we often find that our customers can identify cash flow tightening, energy cost reductions, pinpointing places in their broad landscape where they can identify outliers using our data and then drive that down deeper into, well, should I buy a new energy contract? Should I invest in energy efficiency? Should I put on solar? And so on. And Bastian, I saw when you were doing your screen shares that actually you started with energy. So energy costs are rising around the world. And at first it was like the Ukraine war that caused a huge jump and a lot of volatility in the market. But now we're seeing the rise of data centers around the world. And what they're doing is driving up very constrained local supply. They're adding on a new demand. And that's just escalating local costs. And so then people try and manage that across different electricity grid locations and build out other assets. But now you're constrained by the grid itself, which also jumps up cost. So here in the U.S., in the Northeast area around New York, New Jersey, Pennsylvania, there's a trading region that's experiencing 30 to 40% cost increases year over year due to this confluence of different factors. And it's, households and businesses are not set up to have energy costs jump that much because these are very long, durable investments. And here's a bunch of cost increases coming in the short run. So for GLYNT, what we provide is abundance of data that you never had before, always finance grade, so you can make those business decisions to inform that changing landscape. And see how we've put this into a capital budgeting, internal cost management program. That's the business win that you get from this data. So turning quickly to Daniel and Bastian, finance. I'm talking about a framework that's in finance. And I'll tell you the one thing that's causing that, we see the migration of sustainability to finance, but we see a friction. Way too much data. People are not used to handling all this data. So that would be the friction I would add to, yes, it's moving to finance, but there's a friction. Do you have a counterpart or a similar example to add, Daniel, then Bastian?
Well, I think I already mentioned, right? So sustainability space is moving into a financial grade, let's say, rigor of accounting and calculating impact and then managing impact. And I think there's certainly, let's say, a bit of room for learning, improving, to handling this scale of data, which finance is used to, right? They're used to running your accounts, they're used to managing this type of data. That's not the case in sustainability, where typically you would look at individual studies and say more of a scientific approach to a single product compared to a whole portfolio, for example. And I think, that, let's say, increasing data literacy in the sustainability space is a great advantage. So the closer these two, let's say, functions or competences grow together, I think the better it is. And I think that's the key part that sustainability space can learn from finance, is how to really leverage large amounts of data to manage them effectively, to make the right decision to steer the business and so on. We've talked about the several times. And I think that's what we see what's happening. We're not fully there yet, but we're getting there. And I'm confident that over time, these two functions will be, intertwined even closer. happening.
Yeah, I can add to that, and actually it's kind of repeating history when SAP systems grew over time. Integration was always a strength of SAP, but it was also hard work, and I know this as I had been working between different applications. And I was sitting in finance, and it was always like this. We as finance people said to the purchasing or to the manufacturing applications, hey, you need to pass over this or that information because we need it for financial reports or for legal requirements. And sometimes that was hard to explain then because everyone is working in his own silo and discipline. But it had to be solved. There was no way around. So we had to team up and understand each other. And I'm seeing the same thing now in the sustainability space, that sometimes it's seen as a silo. These are the sustainability people, and I don't know what they need, and so on. And now different disciplines and areas of a company and also of software vendors have to start working together because there's information sitting in the one piece that the other one needs. And this is, for me, history repeating. And luckily, it's happening like that. Sustainability should not be the isolated group of people who want to make the world better, and the rest of it doesn't care. These times are over, luckily, but we still need to learn to help each other and the different disciplines, and then we can be very strong.
So let's conclude with one last round of questions looking ahead to 2026. And we've set the stage. As both of you have said, this is an important issue. And I'm always struck by Janet Yellen, the former U.S. Treasury Secretary, saying climate change is the biggest investment opportunity of our generation because so many things will be impacted, but differentially, money will be moving around. And anytime money is moving around, you can get repricing and opportunities to arbitrage and make a profit in those trades and execution. So we're faced with a big economic problem, but also a big upside potential for those engaged. And as we look at 2026, I'm going to put my 2 cents in on it's connected data and AI, and the data needs to be accurate and verified. So the story comes together, which is as we prepare data for companies, we do get it from all the places we've been talking about, AP, procurement, facilities lists, Concur, expense reports, and so on. And those aggregate into a library of metadata and then the actual activity data. And it can be matched to emissions and so on through other software and our tools. But the point is, when it gets connected together, you have this library of context. You essentially have knowledge graphs about how everything fits together across the enterprise, and it breaks that silo with additional data. So sustainability is not by itself. And this powers advanced AI. Today, it's LLMs, and they can use contextual information to boost their performance and reduce hallucinations. So suddenly sustainability data that's well connected, that's accurate, makes enterprise AI way more valuable and powerful. And it puts sustainability at the front line of a modern digital strategy. That's what I see for 2026. That's a whole bunch of words, but that digital transformation driven by AI and led by specific use cases like where are my high carbon points in my supply chain? Where are the locations that have outliers on energy use? Those use cases can be driven by AI discovery, agentic AI, and so on, and they need these awesome data sets. And so this is my future for sustainability 26. Connected, powerful, and right on the front lines of digital data and AI transformation. Daniel and then Bastian, what do you see in 2026?
Well, that's already quite a program, Martha, for 2026, given that we're already mid of July. But nevertheless, no, I think, you're on spot there. And maybe one aspect that we see coming up in the recent months is that companies and also regulatory bodies are, starting to look beyond carbon, right? So we're very carbon focused, and we see that, how much of the task it is to actually just combine financial accounting with carbon accounting. I think more and more companies are aware that, sustainability is not just one dimension of carbon, it's further dimensions, looking at water consumption, looking at other environmental impacts. And that is what companies are currently starting to prepare for. So increasing the scope of their, let's say, recording direct emissions or environmental impacts that may have, and then basically approaching the same challenges for carbon and attributing those to products which they in the end will sell and which they will need to account for. So I think carbon accounting is the beginning of, let's say, the sustainability reporting space, and we're seeing more movement toward further categories to a more holistic view on sustainability, which a company then needs to manage in line with their financials. And that's going to be a challenge also in 2026.
Yeah, if I look into 2026, all you mentioned, I could just echo. That's if you speak a third one, then this is the nature of it. But what I wanted to emphasize also, I think, and we see that when we talk to customers or prospects, a lot of companies have laid out net zero plans or carbon reduction plans. They were very vocal on it and also in the past, but not every company really has a plan how to achieve those goals. And companies need to get started now if they want to achieve the goals. And I think for that they need the tools in hand to go that way. That's one thing. If to fulfill the plans they have laid out and communicated also to investors, also to sustainable investors. And second, there's also regulatory bodies coming into the game, especially in Europe. Next year, we will have the carbon border adjustment mechanism starting. So for starting now with the heavy industry like steel, if steel is imported into the European Union, you have to pay kind of tax, if you like, for it, which relates on the carbon that is embodied in the goods that you're importing, and that will be a cost factor. So even for those companies who did not have any ambitious carbon reduction plans, it's going to start becoming expensive, and I think that is one thing that will. Besides all the tariff discussion and so on that is happening right now, this will be a hot topic next year to reach the plans and also to comply with more demanding regulations.
So thank you both, and let's call this a wrap. I think what we've discussed today is shown that sustainability is moving from an edge to a center. And let's go back to, the magnitude of the economic consequences of climate change that only gets bigger. And so the role that we're playing in connecting up these trade-offs and doing it with the rigor of finance and the abundance of data that modern automated systems can provide. That's the central issue. And you've been hearing from the front lines. So I thank both Daniel, Bastian, and our sponsors for accounting for a sustainable world, and we'll call this a wrap. Cheers.